Okay, I'm recording this video after the close of trade Thursday, 22nd of April 2010, and we had a roller coaster ride on the markets overnight on the E-mini, and a lot of hysteria going on about the euro. The last time I posted about the euro and market hysteria was about a month ago on the 26th of March, and this was a video I did just looking at news stories and how you can look at news stories as significant and plot significant market turning points when there's a lot of news kind of going on in the markets. And if you want to recap on this chart, it's on the 22nd of March. You can get to it by looking at the Forex charts category here under E-mini topics. Let me just show you what I'm seeing on the euro chart at the moment. The 26th of March was this point here where I posted talking about market hysteria and watch out for turning points in the marketplace, and that was exactly on an end of trend warning signal here on the euro. And from that we had a bounce, 2 or 3 week bounce in the euro, not extremely strong bounce by any means, but it was an opportunity. That you can see the professional bars kind of coming into this low. It was an opportunity for the professionals to start taking profits on their short trades and think about getting long, exhaustion selling and so on. So overnight we had a professional down bar here coming into these lows. We're also coming up to another cyclical turning point. This will be a second cyclical turning point after an end of trend warning signal, and I often look at these as potential reversal points for market trend changes. Who knows? I'm going to be looking out for some support coming into the euro over the next week or two. That's why I'm pointing this chart. And we've also had, we've had our exhaustion selling here. We've got less selling going on, and isn't it interesting that during the European session, this is this professional down bar here, that these lows at 132.50 or so held overnight, but that we've broken through those lows during the Asian session, which is what is just opening at the moment. Now there's a yellow amateur bar here in a rainbow pattern printed on here, but that's just being shown because the session is not closed at the moment, so these signals will change as the day changes and won't be real until the close of that bar. But I'm pointing out that it's interesting that they're using the Asian session, which is the most thinly traded session for the euro, to kind of gap the market down below that 132 level, trying to hit a lot of stops and get people panicked. So I'm not calling an end of a change in trend just yet. I'm just going to be looking at this over the next week or so just to see if we're going to get some kind of bounce in the euro and a decline in the US dollar. The reason for the continued decline in the euro is we're in a downtrend here. If I look at my monthly chart, we had our cyclical turning point back in December on the euro. We're not even close to a cyclical turning point forming the euro right now, but markets don't move in a straight line down, so it wouldn't be surprising to see some kind of a rally back to some kind of significant resistance level and a continuation of the downtrend. So there we go, just some commentary on the euro and what's going on there. Let me just go back to my E-mini chart. This is the 4500 tip bar chart in the E-mini. Last time I put up a video was on Tuesday of this week, and I was talking about some weakness in the euro. So this is Thursday's trade. Beginning of the day session is the vertical red dotted line here, beginning of Thursday's trade, Wednesday, Tuesday, Monday. So Monday we had the low in the market, we had exhaustion selling. At the end of close of Tuesday we had exhaustion buying going on, and that's why I was looking for some weakness in the market after Tuesday's trade, which we got. And then on Wednesday we started to see at the close of trade and at the beginning of the next session we had exhaustion selling on the downside here. On Wednesday's trade, we actually gapped down in the overnight session, kind of opened up very weak, kind of almost 10 points weaker than we had. Interestingly, on the close of Wednesday's trade, we had all of these professional bars kind of taking profits coming into the close here, and then coming into the open after the open had happened on Thursday's trade. We had all these professional bars kind of coming in. We'd had our exhaustion selling signals here, and we were just making bullish divergence patterns here. So as we were making new lows, there was less and less selling activity going on, and eventually kind of the professionals step in, form a low, and the market rallies from there. Now, interestingly, what we've had coming into the close on Thursday is we've had some exhaustion buying activity kind of going on, But I'm a little bit wary about saying that this is going to end up in weakness for the market kind of going on. We've had bearish divergence signals happen here, but in fact what I believe was going on with these professional bars kind of coming here is they were basically buying a trend line breakout at this point and expecting that the market is going to rally higher. Sometimes, we need to interpret these professional bars, and I've talked about this in previous videos a little bit more carefully. Down at these lows where we're making kind of new lows, it's easier to interpret the professional activity here as buying these lows, getting out of their short trades, and getting long. However, here where the professionals are buying a breakout of this downtrend line, I'd interpret that as more getting long and expecting the rally to continue for a while. And then coming into the close on Thursday, you can see all these down bars, professional down bars, suggesting that they're buying as the market is kind of weakening here into the close. So I'm actually expecting a little bit of strength coming into the market. And then here's another chart I'm going to show you on my longer term chart. This is the highest time frame that I look at, the 40,500 tick bar chart. And yes, we formed an exhaustion buying signal on this trend, but you can see this is happening at a breakout of this downtrend line, and for a reversal signal to form we need to see bearish divergence first, and we've just formed our cyclical low here at 1185. We've got a ways to run before we get a cyclical turning point on the high point. So I'm actually expecting that we might be seeing a breakout above the 1210 level. Now I think we'll probably see some weakness into the open of Friday, but I wouldn't be surprised if we start to see some kind of testing and breaching of the 1210 level on Friday or maybe Monday. And then if I look at my oscillator chart, this is looking at the TRIN, the put-call ratio, and the smart money oscillators. We went short a week ago on the TRIN oscillator signal. This was a signal to short at 1193, but we've gone nowhere in that time frame, and all of a sudden we're back into the buy zone when it comes to my oscillators. And as soon as this oscillator turns up, we're going to be taking a small loss, hopefully, on this short trade and reversing and going long again. So all of these oscillators are back in the buy zone. So I don't like this the continued uptrend in this market, but I wouldn't be surprised if we saw some kind of continuation of it. So just watch out for Friday. There's a lot of negativity in the marketplace, but from what I'm seeing, the professionals are starting to get long again, and I wouldn't be surprised to see some kind of testing of this 1210 level here again. So that's just what I'm seeing in my charts. Hope your trading is going well, and I'm looking forward to the end of the week and Friday's trade tomorrow.